how do you find the next stock that's going to break out? Well, that's exactly what we're going to learn in this video. There are a lot of tools and resources available to you right now that can help you search for that next stock that can likely break out. Let me just break this down and show you how easy it can be. So how do you start? Where do you begin? Well, you should always start by using a stock screener. What this does is it has a list of all the stocks. So you can see here, there's a total of 7,063 stocks. Now, based on certain filters, it's going to narrow it down and then give you a search result. Now, you take those results and then interpret the data from that to come up with a trading plan that can give you consistent capital gains. Let's have a look at a live demonstration so you know what we're dealing with here. So I'll just bring up the browser. And here we are. This is the Finviz homepage. So you'll notice there's lots of different features, and just like any other service, you have different areas of this site which can provide beneficial information. But they are known for this screener. That is the most widely used service on Finviz, so that's what we're going to have a look at. If I click on the screener over here, you can see there's different filters. The first thing you want to note is the total number of stocks they have over here is 7,063. Your goal, your aim should be to narrow this down to the point where you only have about 50 stocks. And that's what we're going to do together right now. Now, an important thing to note is that there's different tabs. So you have the descriptive tab, fundamental, technical. Those looking at fundamental usually look at their earnings reports, their price earnings, their book value, and all sorts of other information related to their performance. However, when you're looking at technical information, you're looking at the price action in the chart, whether it's above a certain moving average, whether it's above an indicator, if it's got a high RSI, if it's oversold, overbought, whatever it may be. Now, when it comes to descriptive, you're looking at general information. So let's get started with this. First thing I'm going to do is look at the current volume. Now you want to look at a stock that has some sort of interest in the market already. The reason being is because it has to be a symbol that is commonly traded by day traders for it to get noticed. If there's a bit of price action, then it needs to get noticed in order to get that full momentum and push it to the next level. Let's have a look at the options for current volume. You have a big range, so you have under, over, and then a certain number. My preference is over 200,000. That's enough volume to show that the stock still has potential while being early to the game. Remember, the aim is to be there early enough for you to cash that setup and be there before the breakout. So let's go with 200K for now. You can always change this again. This is just my preference, and I'm just going to show you how I screen for stocks. Now that you have the current volume, let's move on to the price. Now, in terms of the price, in our chat room, we look at stocks that range from $1 to about $5. The reason being is because they're more predictable. They form these setups that repeat themselves over and over again. And when there's a lot of volume, there's a lot of momentum, it really makes these stocks move in a way which is predictable and which allows us to consistently profit while advancing our trading skills. Now, we can also look at the country, but I'm going to leave that as is. For those that focus on a specific industry, you can also have a look at certain industries. You got agriculture, appliances, application software, and so on and so forth. But for the purpose of this video, I'm just going to leave that at any. Again, there's many options. There's sector, you can look at the flow, you can look at the exchange, but I recommend leaving that on any because you do not want to focus on one exchange. Again, these are all just descriptive options and you can really customize it to your own liking. Now, moving on, we'll have a look at the fundamental. Now, you got different things going on here. So you have the price earnings, you have the earnings per share growth in the next 5 years, return on equity, debt equity. You also have the sales growth in the past 5 years, which is interesting to see, return on investment, gross margin, and a lot more. The list goes on. There's just a lot of options in this. For now, I'm going to skip through fundamental and move on to technical. Here we get into nitty gritty. You can see right now there's 264. Previously there were about 7,000, but our price range and other options that we selected brought it down to 264. By the end of this, we should see around 50. So let's see what we get down to. There's different moving averages here. So you have 20-day moving average, 50-day moving average, and 200-day moving average. Now, when a stock's bullish, it's usually above these indicators, and that's a really good sign. So what we're going to do is for sure have the stock above the 200-day simple moving average. And let's go a step further and also have the stock above the 50-day simple moving average. We have other options. So we have the RSI, the relative strength index. When it comes to the RSI, you want to make sure that you're not buying a stock that has been overbought already, but at the same time, not oversold, somewhere in the middle. So we're going to look at not oversold, and the RSI should be greater than 50. If you look at these other options, you have change, so you can mess around with these options as well. You can have gap up, gap down. Stocks that gap up show that there's a lot of interest in it, whether it has some sort of news or any credible catalyst to make it go for a run. And there you have it. You can see that there were a lot more options that we could have gone through, but for the simplicity's sake, I just played around with a few just to show you how to sort of narrow down results. Let's have a look at the charts for these symbols. So just simply click on charts. It populates the charts for the ones that we narrowed down on. And now we can go through these. So let's go to the next step in the PowerPoint presentation, and then I'll come back to that. Now that we use Finviz to screen for stocks and narrow down on certain results, we're going to have a look at the charts for the stocks to see if we can detect any patterns that may indicate a future breakout. There are certain patterns that are looked upon by all day traders, such as a dollar breakout, which you can see on the right over here. This stock is below $1 right now, and it has a solid base at the 60 cents level. When it comes back up and tests $1, you can see that in the past, it went for this rip from $1 to $1.40. Now, based on that, this can go for that dollar break again. What happens when a stock breaks $1? Well, let's have a look at the MTBC over here. This was a huge gainer. It was a multi-day runner. A lot of people had their eyes on it. This broke past that dollar, ran to $2, broke past that $2 as well, touched a high of $2.88 before selling off, testing $2.50, and then found support at $1.60, which is crazy. $1 to $3, that's 300%. And that's the whole point. If you can cash these early, then you can benefit off of them. You can make profit, and it's all about making those consistent gains that help you create a steady income. Let's have a look at the chart on the left. Here you have MOBL. You can see this is forming a wedge breakout. How do you know if it's a wedge? Well, look at this blue line here. You can see it's forming higher lows, and then it's got resistance at $5. Touched $5, came back down, found support at $4 before bouncing back up, and now it's in this channel with a high of $4.80. But key thing to notice is that it is forming higher lows, so it will test this $5 mark again, and when it does, if it goes to 501, it's just going to absolutely rip and break out. You may be thinking, what will this look like after it breaks out? Well, let's have a look at AGC below this. Here you can see a wedge breakout, had resistance at 560, formed higher lows over here, and then had this breakout and ran all the way to a high of 620. This is what happens after this breaks out. Again, MTBC is what happens after this breaks out. The reason I'm showing these charts is to understand that it does pay off to sort of study these charts and look for the next big breakout. Let's go back to the live demonstration and see if we can see any patterns. Noticing patterns should come to you naturally, so I'm just going to scroll through and we'll have a look at some of these to understand what to look out for. ALSK, this was in a channel with resistance at 180, and then it broke out and went for this run to $2. Then it broke out of $2 and went for another run all the way to the high of 260. Then you have something like this where it's a wedge breakout, higher lows, had resistance at 260, and it broke out, went all the way to a high of 350. CCCR, this had solid resistance at $3, break of this previous high, took it at that $3 mark, and then it came back down to 230. CXVC, you can see the stock getting squeezed. It's due for a pop above $5. GSAT, last time it hit $2, it went for a pop till 220, and then it came back down. Now it's testing $2 again. If this can hold, it can have another breakout to 220, possibly higher. IMGN, again, resistance at 450, it's holding higher lows, look for that pop. KGJI, this had channel resistance at 140, break of that 140 mark, made this go for a huge run. NAK, upcoming stock, look at the pattern here, forming higher lows with resistance at 180, break of 180, could see this also break $2 and go back up to $3. PLUG, currently trading in a channel, had a resistance of 240 and is currently making higher lows. PIRS, resistance at $4, break of $4, could see this go for a run because that would be the 52-week high. So just scrolling through these, you saw the different patterns that we saw, the things that we noticed, symbols that we're looking out for, charts that we're reading, research that we're doing, knowledge that we're gaining, the right type of due diligence that will pay off. Performing technical analysis doesn't have to be complicated. We're going to do it right now. Look at this stock. What do you see? There's strong resistance at $5. There's strong support at $4 because it had this bounce play over here. It's trading in a channel between $4 and $5, anticipating that $5 breakout. The current volume of 650K is above the average volume of 400K. You can see over here, it's got more volume currently than the average volume. The price is above the 200 simple moving average. It's also above the 50-day simple moving average, and it's forming higher lows. And it's also got a history of whole dollar breakouts. Let's have a look at what happened at the $4 mark. Touched $4, came back down before breaking out and went to 450 and then came back down. Ever since then, it's been consolidating, forming higher lows, and then it touched $5 and it came back down. Now it's consolidating and it's looking for that $5 break. Once you have a look at all these different charts and then figure out which pattern is likely to break out, then take those symbols, write them down so you can keep track of them, so you can look back at them and look at the price action. And as it's getting closer to that resistance line, as it's getting closer to that breakout level, you can update your watch list. So pay more attention to it, watch the volume, watch the RSI, other indicators to get an idea of when it's likely to break out and then be there ahead of the crowd. Bob's watch list for upcoming breakouts has all these symbols, different reasons, different prices. As things change, as the price action gets more and more intense, there's active and inactive stocks. For instance, with HOTR, Bob was anticipating a 50-cent surge breakout, and what happened was the volume was coming in, so he put it on his active watch list, meaning that he took a position at 50 cents because he believed that it would break out. Another example is FNCX. He was watching for a breakout over $1 resistance, which is a common resistance line in penny stocks. Break of that makes us go for a 10, 20, 30 cents run. Now he notices that these stocks are making money because he was there in advance to be prepared for this breakout. And there's Bob with his profit, overwhelmed, excited with joy, and his portfolio is looking green. And that's what I want for all of you. That's why I created this video, so you can not only screen for stocks, but you can identify certain patterns, create your watch list, monitor the watch list, and then make profit off of that as well. And that marks the end of this video. Thank you very much for listening. If you enjoyed this, if you received a lot of value out of this material that I went over, please do subscribe, share, and like this video. You can also find me on several social media platforms, StockTwits, Twitter, Instagram. If you're looking to get more mentorship or one-on-one guidance, then I welcome you to join our chat room. It's where I spend a lot of time with our students. I put out credible alerts, I put out morning watch lists, ticker commentary, and you're more than welcome to join our free chat room. I'll put the link in the description below. All you have to do is sign up, fill out that form, and then I'll add you to the chat room. These are consistent gains, and it's what I want for all my traders because consistency always beats intensity. Once again, thank you for watching this video, and I'll see you in the next video.